The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, in your retirement. This is a special presentation of the show today. We were preempted by the Baylor game yesterday on Saturday, and so we're live on the radio here today. Typically, I think we do a replay, and so we're talking savings, investments, in your retirement. Our motto in philosophy is to save aggressively, invest conservatively. Since this is a live show today, you can also give us a call at 713-339-1070. That's 713-339-1070. If you have any questions or comments. A couple things. Our motto and our philosophy is to save aggressively and invest conservatively. That's the key to building up wealth over the long term. Save aggressively and invest conservatively. We like to start the show talking about that just so you understand the importance of it to your retirement plan. That's the way you build up the wealth. That's how it's called income-based savings. You put money in your 401k, your 403b, your different type of plans. 10% minimum plus a company match gets you over 13%. That's typically what the numbers say you need to do. Save for retirement. It's increasingly hard to see how you can depend on Social Security in the future. The government, when they're spending $1 trillion every 100 days, we have had $2 trillion deficits. I think this is 4 years in a row. We've had 6.5% debt to GDP deficit spending for, I believe, 5 years. 1 year it was a little in there, maybe 4 out of the last 5 years. It was just a little under one of those years. And we have $37 trillion worth of debt. No one can even quite understand what $1 trillion worth of debt. If you have to start counting, I think it takes like 28,000 years or some ridiculous thing. And yet here we are. And so it's important to take charge of your retirement. Start saving money. If you're not putting away enough money for retirement, now's the time to do it. Call up your HR person, ask them to increase your savings rate, get up what you need to be to save for retirement. It's so important. And by the way, at Max Out Savings Advisors, what we do is we manage retirement assets using kind of somewhat of an alternative approach to investing, which tries to take into account numerous asset classes to build a portfolio that has better growth potential with less risk. We're value investors in the stock and bond market. So we really don't manage 401ks, but it's so important that you take care of your retirement and start out first. We talk about that anyway. And so remember, save aggressively, invest conservatively with your plan, with your savings. Take charge of your retirement today. Again, it's just we live in such extraordinary times that it's just truly remarkable, and we really try to talk about this on the show to get through, to help you navigate through these very tough times. There's always ways to make money. There's always ways to protect yourself. Sometimes you have to think a little bit outside the box. Sometimes you have to think ahead. And that's what this show is all about, helping you understand the world today. There's a lot of positives, but there's also a lot of negatives, and we try to take those into account. One of the things we've talked about a while on the show has been these big trends. And sometimes big trends are harder for people to understand. I mean, I think it's easy for everybody to understand AI when it's on the radio, 24 radio, TV, and everything else, 24/7. But some of these other bigger trends are tougher to ascertain. They're really big trends. On the eve of World War II, looking back on it, you say, "Oh, it was obvious World War II was coming. Why didn't people get out of Germany?" We're not saying this is Germany, by the way, but why didn't they get out? And it was kind of always a big mystery. And now I understand that these big trends are hard for people to grasp. They can understand Donald Trump won the presidency. They can understand Barack Obama or Joe Biden won the presidency. They can understand things are going to be more liberal. They can understand they're going to be more conservative. Bigger trends are much, much more difficult for people to understand what's happening. And if you look at something like it really started what really accelerated the trends of the de-dollarization of the changes in the financial system were a couple things, and I believe these are coming forward now, and this is what we're dealing with in the world. It is we've had a government that's been unable to control spending over the last 20 years or so. I can't remember the last time the United States government has done a budget. Oh, yeah, they do a budget every year. It's called reconciliation, and they just add a little bit to everybody's budget because the Republicans and the Democrats can't agree. Well, this is particularly due to the arcane rules in the Senate, which is making the country increasingly ungovernable. So they haven't made any changes in the budget. We just saw where Donald Trump won on cutting taxes, on cutting spending and getting things under control. Elon Musk went in there with the Doge Commission. He found over $250 billion worth of cuts. They made a lot of the cuts. Candidly, the Senate and the Congress has done very little to cut spending. They won't cut spending. They keep wanting to add spending into the equation. We're borrowing $1 trillion. We're not spending $1 trillion every 100 days. We're borrowing an additional $1 trillion every 100 days. And so it's just so people around the world are looking at this and they're going, what's going on with the United States? They can't control spending. They're starting to look like France. And it's a concern now. President Trump has a strategy with Secretary Bessent. They're going to try to grow their way out of this, and they're moving factories back to the United States. They've got over $500 billion. The number's over $1 trillion, but I use $500 billion, $500 billion of factories coming back to reindustrialize the country. And if you look at what happened in China, when China opened up to the world and joined the World Trade Organization, I think 95, they had pretty much uninterrupted growth for darn near about 25 years, and so there's a case there. But so we also had that. At the same time, we got involved with this ridiculous war in the Ukraine. And where it was a big chance to take out the Russians once and for all. The United States, radical neoconservatives, the neocons, which are just basically warmongers that have gotten control of the State Department during the Biden administration, wanted to take out Putin, and they went all in on to take him out. They basically bet the financial system, and they bet the dollar as the world currency on reserve currency, and they said, look, what we're going to do is we're going to free Russia. If you don't stop right now, we're freezing your foreign exchange reserves held at the Federal Reserve, your treasuries, and then you'll really be in trouble. Well, it was a good idea. Okay, it was a really good idea as long as you didn't look at any long-term consequences. So if you looked at here and now, we have to do whatever it takes, and we don't care what happens a year from now, 5 years, 10 years from now. That was a good move. Anybody with any common sense knew that was a horrific idea if you looked at the long-term consequences, as we stated on the Max Out Savings Show at the time. And so what happened? Every country on planet Earth goes, uh-oh, whoa. If I'm running defense in a country, I've got to talk to the central bank and say, look, you can't have all your money in dollars because the U.S. could freeze the SWIFT system. They could freeze your assets at the central banks, and we've been unable to conduct business. So we've got to come up with an alternative to the dollar, alternative to this financial system, to the SWIFT system, as a backup. Any logical reasonable country, and they don't have to be our biggest enemy, has got to have a backup plan. And so what do we have today? If you look at the price of gold since that happened, and this is important because, again, you have to understand the big pictures in the world, some of these big pictures that are going on. If you look at the price of gold, it started up. The war started, I think, in October of 22, 23. And by August, when they within weeks after they shut down after they shut down, they froze the Russians' foreign exchange reserves. Gold went from about $1,700 up to $3,600 an ounce, over doubled in price. The Chinese, and it's gone straight up. I've watched gold since I was in high school, and it always moves up. It surges up a certain amount and then sort of stops and doesn't. It just keeps going up. It's gone straight up since that happened. It won't stop. The Chinese are buying gold. The Russians are buying gold. The Arabs are buying gold. Everyone in the world is buying gold. The Poles are buying gold. The Turks, everybody's buying gold to add to their foreign exchange reserves. Gold is now the number one holding of foreign exchange reserves in the world from the dollar. So we went from gold was going to a barbarous relic, a doorstop, to basically the biggest holding in central banks around the world after the Russian thing. The number one asset class in the world, performance-wise, in 2025 is gold, up 38%. In 2024, it was the number one asset class as well. And this is, and you're like, look, let's be realistic. There hasn't been that much money coming into gold ETFs. So what would trigger biggest the number one asset over the last 2 years is gold. What would trigger that? It's not Americans buying the GLD or the BAR, which is the gold ETFs. They're really not into it. It was central banks around the world. Now you're seeing Chinese investors, Indian investors, investors around the world are starting to go into gold as well. And what's remarkable is there's been very little pullback. Now, the Chinese have some of the biggest gold reserves out there. Now, the interesting thing is nobody believes those are their reserves. They believe one of the problems you run into with the United States, you ask people about Fort Knox, and there's a lot of very sophisticated, very smart gold people aren't quite convinced the gold is there. My own personal opinion, I think a lot of it wasn't there. I think it was lent out. I think they've been busily getting it back in. I think this is the reason you saw a massive surge of gold out of the London vaults into, and stick with me here, it's a little complicated, into the U.S. But most experts in the world think, and big investment banks think China's gold is materially more than they're reporting on their reserves. And so gold is going to become an alternative asset class. There's a shifting away from the dollar. And long term, that's not going to be good for the dollar. And this is something we have to watch. And this is a big shift that's happening right underneath everybody's noses when they're all fixated on the what's happening with the tech sector. You know, everybody's staring. I mean, CNBC runs a constant stream of buy NVIDIA, buy Palantir, buy Microsoft all day long. I mean, it's constant tech. Let me give you some numbers here. Here's a simple one. The Mag 7 is up, where was the number? About 15% year to date. And looking at some of the numbers, and this was interesting to me the other day because Google's up 27%, Apple is down 6%, NVIDIA's up 32%, Meta's up 29%, Microsoft's up 21%. And Palantir's up 126%. Not bad numbers overall. If you look at some of the precious metal stocks, Kinross is up 152%, Hecla's up 128%, Pan American's up 83%, Newmont Mining is up 115%, and Barrick is up 90%. The GDX, which is the gold index, is up. Where is that number? It's up about 98%. Yeah, there it is, 97%. Excuse me. And so we have had a massive bull market in gold, and gold. Nobody's talking about them. All they can do is talk about AI and what's going to happen next there, which is exciting. But that's not the markets. And underneath it, the markets are changing. We're going to discuss some of this, and so it's important to be in all these different sectors that we talked about for years. You don't want to just be in the S&P 500. You want to be S&P 500. You want to be in overseas stocks. You want to be in commodity stocks. You want to be in precious metal stocks. You want to be in all types of things. This is why we pointed this out for years, and we're seeing this type of performance out there. And understand the financial shift and this rapidly shifting, and countries around the world are looking for alternatives, and they appear to be coming up with gold and other types of currencies to replace the dollar. And that's not good for us. Anyway, tell you what, we'll be right back after this quick break right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
I'm Sam Malone, president of 512 New Media. We're Houston's leading marketing and content creation firm for many reasons. Our assets are exceptional, from video production to web design, strategy, and the ability to say no. Saying no is integral in launching a successful, profitable campaign. For example, take a look at Memorial Day. It's a federal holiday set aside to honor and mourn those in our U.S. military who died while serving our country. I'll say it again, for those who died while serving our country. So how does having a sale work in unison with the reason for the day off? Look, we know people will be at the beach and barbecuing and having parties. We would probably say no to launching a Memorial Day sale. So is there another way to commemorate the day while marketing your brand? Absolutely. And from our experience, the same holds true with Easter Day sales and MLK Day sales and Christmas Day sales. That's why we're different. No cookie cutter, follow the crowd, template marketing. Let's talk. We're 512 New Media. 512 New Media. With better marketing comes better value, creating better results.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back to the Max Out Savings Show. Last week was just, it was a tough week. It was very, very busy, and we were just shocked by the assassination of Charlie Kirk. And Charlie Kirk was a great guy. He cut a commercial for a spot for our radio show, the Max Out Savings Show, recommending the radio show. And he was a great guy. He was super helpful. He helped people out all the time. And it was shocking to me. I mean, absolutely shocking. And a couple thoughts on this. Look, I think this is comparable to the assassination of Martin Luther King. They're very, very, both of them are very similar. If you look at Martin Luther King, Martin Luther King was all about, he fought for the right to vote. He fought for desegregation. He fought for civil rights, voting rights. He fought for voting rights. And he was known as his absolute belief in Jesus Christ and evangelizing. I don't know why I have such trouble with that word. As an evangelist for Jesus Christ. If you look at Charlie Kirk fought for the right for people to vote. He fought for voting rights for young people that weren't being denied to vote, or they weren't given good polling booths, or all types of other things for college kids. He fought for their right. He fought for their fairness, their rights to be viewed fairly in a job situation, that everyone should be looked equal, whether if they were going to get a job, if they were getting to school, if they were getting a promotion, get a raise. You should look at the quality of their work, not whether the color of their skin or their political affiliation. He fought for that. He fought for the United States of America. He fought for freedom. He evangelized Jesus Christ. I mean, that was his, the foundation of everything he believed in. Just like Martin Luther King. Martin Luther King started out in 1955. He was a civil rights leader. He was assassinated in 1968. Charlie Kirk died when he was just 31 years old, and which is shocking. But interesting thing about Charlie Kirk. Martin Luther King was a civil rights leader for 13 years. Charlie Kirk started out in 2012, started Turning Point. He actually started working when he was 17 years old, but he started Turning Point in 2012, 13 years, just like Martin Luther King. I genuinely believe. I think this is a shocking event, as Martin Luther King's assassination was shocking. I think this is every bit as shocking to the American people that something like this could happen. Clearly, there's an issue in this country with violence, and it appears to be using violence to stop the debate of free speech. Martin Luther King would get up there and debate and talk about the importance of this and why you should believe in equal rights, why you should believe in the content of character, not the color of your skin. He talked about all these things, and they wanted to silence him. And it's eerily very similar. And I tell you another time that this is also reminds me of. If you look back in that period between about 250 A.D. to 312 A.D. 312 was the battle of, Milvian, at the Milvian Bridge battle, when Emperor Constantine, he's about to fight the battle. He arrives on the battlefield that day, and they look into the sky, and there's a cross in the sky, and it's very clear to everybody. And he retires, tries to figure out what to do, and then paints the symbol on everybody's shields, and then basically converted after won the battle and converted the Roman Empire to Christianity. But between that 250 and that 312, might have been 220, there was numerous Christians were killed for their beliefs, and evangelizing the teachings of Jesus Christ. They would show up at a pagan temple and stuff. They would be attacked. They would be stoned. They would be all types of things, just one horrific thing after another. And the number of actually saints during that time is just remarkable, because these people stood up to what was happening, but it didn't end well for them. I mean, they stood up for Jesus Christ, but it didn't end well. And it was the same people, and people are attacking Christians today in the United States, around the world. They're burning churches in Europe. They're killing Christians in Africa in large numbers. It's the same type of thing, and you just have to stand up to stop. You can't back down from evil. We can't back down. It's important that the Charlie Kirk's Turning Point, the people like that, they still have access to universities where there should be a fair discourse back and forth on issues in the debate, and you can't back down. Anyway, it's horrible what's happened to Charlie Kirk, and we cannot let this just. We can't back down from this in any way, shape, form, or fashion, because that was pretty much the whole idea in doing it, is to try to stop the movement. And this movement was targeted at Americans. It was targeted at Christians, make no mistake about it. And I think something should be said about it. I'm very sorry this happened, and it's just, there's just nothing you can say about it, but it's very sad, and we just have to keep moving forward. That's on Charlie Kirk. And one of the more other things, I'm just amazed how many people were on Fox to listen to them talk. Charlie Kirk was their best friend. And the amazing thing is, these people didn't sound like they were making it up or stretching. I really didn't know Charlie Kirk, but these other people, you could tell they had a tremendous relationship. But the number was what was so amazing. I mean, I think they could have had hundreds of people up there at Fox. I mean, Fox just kept going through the people, and every one of them, Charlie Kirk was just a force that so many people, were so happy to be his friend. I mean, everybody, no one had a mean thing to say about the guy. It's very sad. And so, but well, again, you can never back down from a situation like this at all. Now, back to the markets in here. A couple things. We've got the where were we? We have the. I want to touch base on the Federal Reserve. There's a meeting this week where the Federal Reserve is going to decide the direction of interest rates. And you probably heard a lot about it. The thing to remember when it comes to interest rates, the Federal Reserve sets short-term rates, something called the Fed funds, which is what they pay at the Fed window, so to speak. And so everybody kind of prices everything off of the Fed funds rate on the short end of the curve. This is money funds and things like that. So right now it's about 4.3%, 4.33%. It was last year. It was trading about 5.3%, and in starting in August, right before the election, late July, before the election, the Fed came in and started aggressively cutting rates till they were down at election time at 4.6%, and then right after the election, they were down to 4.4%, not say 4.5%. And this is why Donald Trump is so upset. And then because he's like, why did you cut the rates right before the election if you're not political? But so expect the Fed funds. So the Fed wasn't going to cut rates. And one of the things they're looking at is the economy is pretty good. Inflation is even the most recent CPI was low, but the core CPI was still over close to 3%, which is still high, but employment is falling. And so there's pressure to cut rates. And why this is so important, this is a big deal for a couple reasons. The Federal Reserve and Donald Trump are in a feud. Donald Trump says rates should be lower. The Fed says no, they shouldn't, but now the economy is slowing, so they're likely to cut rates. But the reason why President Trump is so hung up on cutting rates is not because he wants to help out the stock market, which usually is that's what the case is. But the important thing is we have $37 trillion worth of debt. The average debt is about 5 to 6 years. And so if they can cut short term, and our interest each year that we have to pay on the federal debt is over $1 trillion. So it's about 5.6% average. 6-year average. So if they can cut the rates to some extent on the short end, they can reduce the $1.something trillion in interest expenses, lower the deficit, help start paying off the debt, stabilizing things, and helping out the U.S. the financial system. And so this is one of the big battles. And President Trump's plan with Treasury Secretary Bessent is basically a multi-pronged stool of what we're going to do is we're going to sit there and put tariffs in place. Because it's going to create income. We're getting $30 billion a month on income from tariffs, which is going to help us pay down the deficit. In addition, if people bring their factories in, we'll cut the tariffs in their country. So we'll bring factories back to the U.S., which is going to create growth, which lets us grow out of the problem so the economy gets bigger and more revenue comes in and we can further pay down the debt. And then in addition, if we can cut the Fed funds rate, that will help us reduce the interest we have now, further reducing it. And then the fourth leg of the stool, so to speak, is the DOGE Commission of cutting government spending. So if we can cut $250 billion in government spending, if you're getting $30 billion a month, let's say that works out to be about $360 billion. So that's about $600 billion right there in cuts. And then if you can get some growth with additional income, that lowers it more. And then if you can also have the interest rates go down, so you're paying less deficit, less interest. You can see the lower the interest rate, the lower the deficit is, which is over $2 trillion now. So you can see how we can start getting it to a place where we can lower this deficit, get our debt under control. But all of these things have to be in place. It's a four-legged stool, but honestly, it's more like a two-legged stool in the fact that if they can't get one of these things to work, if they can't get the rates lower, then the stool is in danger of toppling over. And that's what the whole picture about. That's kind of why we're seeing this big push. Now, people will tell you, hey, look, interest rates are going lower, so the stock market is going up because the market always goes up when the Fed cuts rates. Now, the only problem with that is the market has gone up. It's had a huge run off of the bottom, one of the biggest runs in history off of that April bottom. I mean, people forget, it was mid-April. This market we started out the year, and then we had almost a 20% correction. And I don't know if you remember that. We had 3 days when the market fell about almost 15% in 3 days when they talked about the tariff. So since then we've had a tremendous rally up, one of the biggest rallies in history. So the market is anticipating this big rate cuts. So we'll see what happens. The meeting is Wednesday. Now, the consensus will be, well, the Fed's going to cut rates and then the market's going to boom. The only problem is people have been pretty sure they're going to cut rates here for a number of months. They've been talking about it. So the question is it built in the market? The other thing we want to watch is interest rates around the world have been going up on the longer end, particularly in the UK, France. A big one to watch is Japan. And that's drying up the carry trade, which people borrowed short term, paying 0.5% or something in Japan, and then they'd go buy treasuries or stocks or something else in the United States with the money. It was kind of a perpetual motion machine. Interest rates elsewhere in the world have gone up. So the question is, if rates start going up here, will that push down the dollar? And I think there's a real possibility the dollar could fall here later this year. It's been holding up in kind of the same pattern since about July, same spot around 98. Keep in mind it began the year at 110, so that's a big one. So it's had one of the worst starts to the year for the dollar so far in history. But the question is, what happens now? But the only thing saving the dollar is you're dealing with the Brits, you're dealing with the French. I mean, it's like they say the best house in a bad neighborhood, but the dollar is starting to look like the best house in the ghetto. I mean, it's just none of these guys. All of them are printing money. All of them are trying to cut interest rates. Their economy's going, and so this is some kind of we're seeing out there, and this is why you're seeing this big move up in gold. Now, here's where it gets a little bit interesting. Tell you what, let's take a quick break, and we'll be right back to discuss that, and because some of the things what we expect to see from this here later this week, and some ideas right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka will return shortly. To speak with Ted Gioka now, call 713-339-1070. Back in a moment with the Max Out Savings Show.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday at 7 a.m. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com. This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com. In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
And now, more of the Max Out Savings Show with Ted Gioka.
Welcome back to the Max Out Savings Show. We're just talking about a couple things here. This is a live show today on Sunday, which is unusual. Usually we do replay it from Saturday, but you can give us a call at 713-339-1070 if you have any questions. Also, we want to talk about one of our sponsors, Rangoni Alto Gin. It's a phenomenal organic gin from the Italian Alps, all natural products. In ingredients, in mountain herbs that are mixed together into just a phenomenal drink, and it's completely organic. It's in some of the best restaurants in Houston. I've been, people tell me they were getting a very good response to it. So if you get a chance, try it out. It's Rangoni Alto Gin. Look for the Kingfisher bird on the label. You can get it at Specs. I think Specs downtown, some of the other Specs. Rangoni Alto Gin. Now, if you get a chance, call us up, 713-339-1070. We're talking about if the Fed starts cutting rates, one of the things you could see happen is the dollar go lower. If that happens, likely it's going to trigger a move in some of the other commodities. Gold and silver have been the number one commodities. Copper's been pretty good. It's been lagging a little bit. I think copper's going to go higher in here. We actually had one of our stocks had a takeover this week. It was quite an eventful week. I'm just exhausted from this week. But Copper was up, and then it had a big fall down due to some of the tariff issues, and I think that's going to go away. The problem is there's such demand for copper due to AI, artificial intelligence, data centers, the generation of electricity to power the electric AI to the electric vehicles. The need for copper in electric vehicles is much higher. I mean, just pretty much across the board, copper is one of the best ones out there. I think that's one. The other one interesting thing is if you look at oil. Oil is down year to date. They're going back and forth with the Russians on it. But if the dollar starts going down, keep in mind oil is denominated in dollars. So as the dollar drops, oil is going to go down, and the dollar's down about over 10% year to date. And oil started out about 77.5. It's at 62. So it's even cheaper around the world. I think you're going to see some more growth out of China and other places. I think you're going to see – I think oil's got a good chance to start moving up. A lot of big oil companies are really cutting back production in here. No one's really moving to sit there and do big expansions. And so I still think the oil stocks – are going to be a pretty good place to be in 2026. Precious metal stocks, interesting. I mean, they're good. We've looked at them. We have a lot of profits in this area, and we keep going back and forth, and we look at some of the numbers on them, and some of these companies have their growth is better than tech stocks. If you look at them, if you look in 2024, 25. 23, 24, 25, and then figure in 26, it's better than the tech stocks. And yet they're trading at, some of them are 11 times earnings, some of them are less than that. And so really, I mean, I think that is one area that could be pretty good And so I think this is something. It's interesting. We just haven't seen the big surge in the PEs. Really, the biggest part of the PEs really has been in the tech sector, and so I think that's something. But I do think the commodity bull market is still intact. Our cases, and I think a lot of this market is going to move on macro stuff really back and forth. I mean, the tech stuff is real. I mean, if you look at one of the interesting things was Oracle came out and missed the earnings, and they said, look, we're getting orders from ChatGPT or OpenAI for a bunch of data centers, and it's going to work out to be, it was like $300 billion in revenues by 2030. I'm like, wow, this is really good. And the stock goes up 40% in one day. Massive move. Oracle's CEO, Larry Ellison, is now the wealthiest man in the world. At least he was at the time, earlier in the week. And so I looked into ChatGPT, OpenAI, and they have a market cap of $300 billion, and they're raising $8 billion. I'm like, wait a minute, how are they going to come up with $300 billion to fund all this? And the electricity alone to produce to run the AI centers that ChatGPT that Oracle's going to be building out and selling to these guys is going to be the same as 2 Hoover dams. And understand, the Hoover Dam was the crowning achievement in the Depression, producing massive amounts of electricity, which basically helped build out the West at the time. And it shows you just the enormous electricity demand out there. And again, the question is can ChatGPT get the $300 billion in revenue? It is possible. But again, if you look at these companies, the numbers are it's about what was it? The big hyperscalers, their capex in 23 was about 35% of cash flow. It's going up to 72%. And so they're massively ramping up their capex. Well, these guys are the biggest stock buyback. They're spending billions, about trillions, almost probably over $1 trillion recently on hundreds of billions of dollars on stock buybacks. Well, you can't keep massive stock buyback programs and massive capex at the same time. And all of these companies are they're profitable companies, but their market capitalizations are massive. And so the question is, how are these going to play? Are some of them going to be big winners? Absolutely. Are they all? Not likely. I mean, if people forget, the build out of the internet with the cables and stuff, with the fiber optic, there was people that were bankrupt before it was over, and so I mean, I do think there's starting to be kind of some understanding on Wall Street, like, hey, what's going on here? I think it was The Economist had the build out of AI on the cover. They're going to spend $3 trillion, and they had, just pallets of money being shoveled into a furnace. And so there's starting to be some question out there about, look, what's really going on? Is this CapEx all justified? Where are we going to get the energy? Will the grid hold up? Where are we going to get the money for this? I mean, these companies are now taking on large amounts of debt at the Mag 7 to sit there and fund all this stuff. And the question is, will the revenue actually be there? And will the electricity be there? I mean, all of these things, as we talked about on the show last week, electricity's at the margin. When you're short on power, your marginal most expensive power is running all the time. Well, they're gonna allocate that most expensive power to everyone, which means your electricity bill is going to be rising. Electricity costs have been going through the roof in here lately, and I think this is going to be a big issue because the American people aren't real thrilled about having to pay higher energy costs. Energy costs, I think last year were up 5.3%. Electricity costs, and then once oil starts turning up, this is going to push it. Keep in mind, one of the things keeping down inflation right now is dropping oil prices. It went from 77 to 63. Well, and we're trumpeting the end of inflation. Well, when that oil starts going up again, electricity's going up. That's going to be big issues with inflation, and this is going to be this stagflationary environment we're talking about. And so, what you want to try to be into the companies are going to be at least in areas that there's going to be demand, be it copper, be it electricity, be it countries around the world especially to get gold. I mean, it's tough to make a case to buy gold up here. I'm eventually going to have some type of correction. I think silver is much more interesting just because that thing really seems to still be lagging behind. If you look at all types of different curves on the demand there's just been there's been supply deficits for the last 4 or 5 years in silver. Typically silver, if you look over a 50-year time frame, runs to $50. Twice when the big move happens, tends to go to 50, and that's not even an inflation adjusted 50. Think about that. Yeah, and so I think the silver's more interesting. I think the electrical area is just much more interesting. Copper, I think, is probably the next one that's ultimately going to go up because there's just so much demand out there. I mean, 2 Hoover dams. I mean, think about that. It's extraordinary. Let me see here. What is it? Hold just a second. You know, I think they're expecting they're going to need 10 gigawatts. And ultimately, I think by 2030, they're going to need 67 gigawatts of power into 2030. That works out to be an average nuclear plant has 1 gigawatt. That's 67 nuclear plants. I mean, this is what we're talking about. Last week, we actually, for our clients, made an investment in quantum computing. I thought I would never do that, but when I looked into quantum and actually talked to some people at the quantum companies, they're like, yeah, Ted, I mean, it's happening now. We're putting quantum computers together. It's, it was kind of in the beginning, but understand, quantum computing takes 1/10 of the power or more. And so I was talking to another friend of mine that knows quite a bit about technology. And I said, yeah, it's 1/10. He goes, no, Ted, there's some cases it's 1/100th of the power. And so the question comes in, are we going to deplete the world's hydrocarbon reserves over the next 100 years, basically running data centers? Or are we going to come up with another solution? And that likely solution is going to be quantum computing. That's getting kind of far out there. But again, we have these big issues. We have the de-dollarization. We have the AI. We have a shifting of the financial systems around the world. And all these are going to create big opportunities, and you want to be in the sectors that are going to take advantage of some of these big trends. AI is another one. I mean, we've had a couple things in AI. That really hasn't been our best area, but there's other areas we've done phenomenally well in. And so you want to understand you're not going to catch every one of them, but you want to catch some of them. This is why we're talking about some of these big issues and going forward and understand, and you don't want to get caught in the hype. So what you want to do is kind of get ahead of the people getting in these things, and you want to diversify and spread your risk out. That's going to be some of the things that's going to be key on this whole deal. Anyway, something to think about. The big news this week we want to watch is really the Fed. Here's another interesting statistic I wanted to run by you too. And again, I think it's important to understand the world today so you can make good investment decisions. You watch the mainstream media, all they talk about is the same stuff all day long. It's either ginning up hatred or it's if it's a financial channel, it's 24/7 AI. But from 1925 to 1920 to 1925, if you look at nominal GDP growth, where would it be? So that the 5 years from 20 to 25, nominal GDP growth, where do you think we'd be on the curve since then? Since after World War II, what would be? Would it be a high growth, low growth? Think about it for a second. Here's the answer. It's the strongest growth cycle since World War II. Since 2020. Now, part of that was because after 2020, we had the government we had the economy shut down, then we restarted it, and the Fed flooded the system with money, and then we had the AI build out, and we just had a lot of things happening overall, but it's been enormous amounts of government spending. Keep in mind, 6.5. What would we say? Over 6% GDP for the last 5 years. Deficit spending every year. Well, if you had a balanced budget, that means you'd have 6% left. This number will be one of the smaller ones. And the question is, can the government keep spending 6.5% a year borrowing? Can they keep borrowing 6.5% of GDP and paying it out to everybody in the country to boost GDP? How long can that go on? And the answer is not a long time. This is why people are buying gold and silver and other assets, because, like, look, this thing is coming down. I want to get out of the way. Or if you're the Arab countries, or if you're the Chinese or the Russians or the Brazilians, or all people around the world, like, look, I'm not sure what's going on with the U.S. They seem to be recklessly spending money. I need to have an alternative. They just froze Russia's foreign exchange reserves. I need an alternative. And so this is they're looking for alternatives. This is why the precious metals is going up. And so I think you've got to have that broad-based portfolio. You have to have higher levels of cash. Most retirement portfolios we see, they've got like 1 or 2% cash. Well, who are these people trying to kid? The minute the market goes down, they're going to get blasted. They have, and then they can't buy anything because everything they own is down, and they don't have any money to buy anything cheaply. What our research is saying is, look, when this thing starts going down, you better be pretty quick on the trigger, because everybody else is looking at the same thing, and they're all using AI and everything else, and they're all going to come to the same conclusion at the same time. And there's nobody, as we say in the business, on the other side of the trade that wants to step in when things start looking bad. And then you're going to get a very quick drop in stocks. Remember, 3 days the market was down 10 to many stocks. Most stocks were down 10 to 15% in 3 days. And so, again, it's important to spread out that risk. And thanks, Val. In managing your risk. So a couple things. If you need some help, go to our website, maxoutsavings.com. We have 2 things we can help you out with. It's a free newsletter, which means you sign up for it. You're on the list. It's a private list. We're not going to call you. We're not going to bother you. I think 5 years ago we did some seminars. We sent out an invitation for a seminar. Might have been more than that. And we really don't do them much anymore. So we're not going to bother you, but we're going to send out this report. We write a lot about these big issues so you can understand the world. We try to come up with some more simpler things, too. That a lot of things aren't really changing right now, so there's not a lot of changes in IRAs and 401ks. So we're not really talking as much about that. But there will be more changes coming, and we want to get you ahead on those retirement issues as well. We write about them in the Max Out Savings Report. It's completely free. Just go to the website, sign up for it at maxoutsavings.com. If you'd like some help with your retirement assets, you have an old 401k, you're retiring, just go to the website. You can give the phone number, give us a call, or send me an email, and we'll set up an appointment. We're here in Houston, Texas. I'll meet with you personally and show you how we manage funds at Max Out Savings Advisors using our value investing approach to the stock and bond market. I hope everyone has a great week. And remember our motto, save aggressively and invest conservatively.
Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.